Well, tech giant Cisco is easily one of the biggest growth stories to come out of Silicon Valley in the past 25 years. And the executive who led that growth was former CEO John Chambers. He served an unprecedented 2 decades as CEO. And by the end of his reign, Cisco's revenue was nearly $50 billion. Now he's investing his own money in startups as a venture capitalist with his JC2 Ventures. And John Chambers joins us this morning from Stanford University in Silicon Valley. John, thanks for joining us. Nice to have you back on the program.
John, it's an honor to be back on the program and so much to talk about in terms of technology, companies, and people's lives.
Yeah, you're right about that. I mean, where would you say the state of tech is starting a new year, 2020? What is top of mind for you as an investor looking for new opportunities out there?
So in the sequence you raised it, 10 years ago, John, I think on one of our sessions you and I went back and forth on, we said every company would become a technology digital company. Most people did not buy that. If you're at the Consumer Electronics Show in Las Vegas at the present time, you realize that's going to happen. It will impact every area of our lives, from our health to how we do transportation to how we get educated. And I think it's so important that every French citizen, where I'm working with Macron in France, or India with Modi, or in Canada, understand not only the financial responsibilities and how do you do financial management, but also how do you bring tech in your life in a very positive way, tech for good, if you will. So I think it's going to explode this year. I think you'll see more IPOs than before. There'll be more emphasis on free cash flow and profitability, which I think was needed. And my portfolio, the average growth in many segments of the 18 companies I've invested in are over 100% per year. So the startup world is in good shape and gets pretty exciting.
What would you say then, because we sit here, we talk about bigger companies, publicly traded companies. You might have heard us talking about, there's the retail haves and have-nots. Some retailers falling behind because maybe their digital footprint is challenged. What would you say is the right recipe when it comes to implementing new technology into an established business? What have been your observations on that?
Well, every company does have to become a digital company. The connection of devices, whether you're in the store or how you interface the consumer at home, is key. 40 to 50% of the Canadian firms, just like the large U.S. firms, will disappear in the next decade. So that will not be an exception. What you've got to do is you've got to disrupt or you get disrupted. You've got to become a digital company or you're going to get left behind. But more importantly, I think you have to, in a country or in a province or a state within a country, you have to get a startup community, because that's where all jobs, incremental new jobs, will be created. The large companies in Canada, the U.S. in total, will not add any headcount this next decade. In fact, will probably destroy a lot of jobs because of automation, artificial intelligence, etc. So getting the startups going out of great universities like McGill that you talked about earlier, I think are so key.
Yeah, what's your general, you travel the world, and so you have a pretty great read on a lot of different economies. You talked about automation. A lot of Canadians worried about how that's going to impact their jobs. Canada's really trying to figure out where the economy is headed over the next decade. Are there things you've seen here, in whether it's through the startups or through some of your meetings, that you've been optimistic about?
Yes, it is, but you've got to be proactive in this optimism. If you know that 20 to 40% of the jobs as they exist today, whether you're a bank teller or you're a truck driver or a Uber driver, are going to disappear, you've got to create new jobs. And so I'm seeing more and more countries, and we talked earlier briefly about France with Macron there, focused on becoming a digital country and a startup leader within Europe, which they've done. The number of their startups are, if you can imagine, John, up 5x in just 4 years, from 100 venture capital back per year, 130, to over 700. You're seeing Modi do the exact same thing in India, where the large companies in India probably will not add headcount. They've got to create 1.2 million new jobs per month. And he's heavily focused on not just startups, but how do you do it across all 29 states. So every company becomes a digital company. Every company has to act like a startup. And you're seeing these large companies interface to startups in ways they've not done before. We talked before about McGill University. This is a startup out of McGill that I invested in to potentially solve world hunger. Crickets is the next form of protein, and for the graduates there, literally focused on how do you transform the Internet of Things, raising crickets very quickly with very, very healthy effects on the environment. So it is that startup innovation that needs to be taught in our universities, and it's also how do you do financial management for all of us.
The cricket market, it's fascinating to watch. I know you've been watching that market real closely for a while. Can you just tell, for those who aren't familiar, why are you investing in that area? What is it about cricket protein?
Well, you nailed it, John. What is interesting is I invest wherever there's a major market transition. You talked earlier about retail with the challenges from Amazon and other online players, combined with technology. And then I invest in the CEO, and then I invest where my customers tell me to invest in terms of the balance that I hope is near an inflection point. What's exciting is I hope crickets will become the next lobsters. Lobsters used to be something you fed only to criminals, and even then you wouldn't feed them more than 2 times a week in Massachusetts because they felt it was cruel and unusual punishment. And I say only that a little bit tongue-in-cheek. You can grow crickets at about 1/10 the impact on the environment that you do with meat. You're able to do it on such scale. You're able to have the cleanest form of protein there is. And while some people like myself might like the crickets that are flavored, you can use protein powder to really do it, and maybe at the same time address world hunger on a scale. But what you're seeing is technology in every industry is going to change with artificial intelligence. And if you were to say, what's the hottest area going on now? Artificial intelligence, AI. I think it will be the only major technology people are talking about that will end up looking back and saying it was not overhyped, it was underhyped, much like the internet was 25, 30 years ago. We'll see if that plays out. About half of my 18 companies are focused very heavily on artificial intelligence.
Well, that's really great context. And speaking of hype, you know, when we look at the public markets right now, and I know you're a big promoter of companies going public. It's important in your view for economies worldwide. But I'm looking at the stock market today. We've got all-time highs, and specifically, if you look at the technology landscape today, you've got Apple, Microsoft, Google, Facebook, they're all at new highs today. We've got Apple and Microsoft with market capitalizations north of $1 trillion. Google is getting close. What does it say to you when the most dominant companies in the stock market are those big names from the world of tech?
Well, it means that tech will interface to every aspect of our lives, hopefully mainly for good, and tech owes an obligation not just to produce financial results for their shareholders, but also for society as a whole. So a new evolution of capitalism on it. But it does speak to what we alluded to earlier, that every organization, every person becomes a technology company. However, no large technology company has ever been the dominant player 2 decades later. As the next form of technology comes in. So artificial intelligence, the cloud moving to the edge, you're going to see a new generation of startups probably become the next Apple, the next Facebook, the next Cisco. And it is identifying those early on. But if I were to say 2 areas to bet on, artificial intelligence, cloud moving to the edge, which means that's where you're going to compute, gather the data, whether it's in your car, in a branch office, etc.
John, given that, and you talk about artificial intelligence, and there's some great talent here in Canada that has been focused on that. Before we go, you're a great coach and mentor to young startup leaders. Here in Canada, sometimes there is a challenge in taking that idea and great technology and turning it into a sustainable business. What is your advice to those young leaders who have a great idea, or they're off to a good start with the tech, but they're struggling to get things to that next level?
Well, it's one of the things that is an issue not just in Canada, but in the U.S., except maybe for Silicon Valley or New York or Texas, also in Europe or in Asia. And so the first thing I recommend is anticipate where you want to be 3 to 5 years out. Have the courage to really dream. Think like a teenager again when the world is your opportunity. Second is you need to focus on profitability and cash flow earlier. One of the reasons the IPOs did not perform well in Canada and US is too many of them were focused purely on growth and did not focus on free cash flow and profitability. All 18 of my companies are really focused on that. And I think the reason I'm optimistic about startups this next year in the public markets in North America is you'll see a return back to the future focused on free cash flow and profitability. Understand that you have to, as a leader, have differentiation. So what is your differentiation in your product, your go-to-market strategy, et cetera? And the last element is constantly reinvent yourself. It's going to take about 10 years for the average startup in Canada to go public that ends up going public. So as a young executive, you've got to reinvent yourself. And John, there's no such thing as a straight up and to the right. It doesn't matter if you were Cisco, where we increased the value of our shareholders from our IPO to the time I left Cisco by 156,000%, $1,000 invested, got a shareholder 156,000. Identifying those early, but you're going to go like this as you grow with tremendous ups and downs. And so don't get too excited about the positives. Don't get too pessimistic about the negatives. Startups have a crisis every other week, and that's probably one of the things that many investors haven't thought about.
Helpful advice as always. John, thanks a lot. Happy New Year. Appreciate you coming back.
John, I'll be there for you anytime. Have a great day.
Thanks a lot. John Chambers, CEO of JC2 Ventures, joining us, former CEO of Cisco Systems. We're going to